Hello, greetings, and welcome to Dividend Blasters. This is our 77th video, and our topic today is I earned $3,300 this past week selling covered call options. I'm going to talk to you a little bit about how I did it, what I sold them on, and how you can do this as well to turbocharge your portfolio with more cash flow and use it as a complement to dividend investing and even growth investing. First, a quick disclaimer. I'm not your financial advisor. Purpose of this video is for information, education, and reflects my own personal opinions, research, and experience as an independent investor for more than 30 years. So please do your own research, your own due diligence, consult a financial advisor prior to making financial investment decisions. Covered call options, that's how I did it. I sold 26 covered call options this past week. If you want to learn a little bit more about the basics of selling covered call options, check out my previous video. I won't cover that here. I'm going to get right to what I did. First, Amazon. I sold one covered call option on Amazon, strike price $2.15. It was trading at $212.50 when I sold the option, and I collected $141.34 in premiums. This option expired yesterday. The stock was trading at $199.05 at expiration. Next one, Chevron. I sold one covered call option on Chevron with a strike price of $160. When I sold the option, it was trading at $155. I collected $71.34 in premiums. This option expired yesterday, where Chevron was trading at $156.35. And that's the ideal outcome we want. We want this option or all these options to expire at the end of the options contract period where that price is trading below the strike price. So that's the ideal outcome. And you can see that in the graph here where I'm showing the strike price. I'm also showing the activity of the stock throughout the week, where it was when I sold the option and where it was when the option expired. And that's exactly what we want to see. Next one. Next one is Energy Transfer. Energy Transfer, I sold one covered call option where the strike price was $19.50. When I sold the option, it was trading at $19.15. I collected $18.44 in premiums. The stock was trading at $17.50 yesterday when the option expired at the end of trading. Next one, Google. I sold one covered call option on Google. The strike price was $175. When I sold the option, it was trading at $171.50. I collected over $100 premiums on this covered call option. This option expired yesterday. Google was trading at $173.72 yesterday at the end of the options period. Next one, Coca-Cola. I sold one covered call option on Coca-Cola. The strike price was $72. It was trading at $70.75. When I sold the option, I collected $11.44 in premiums on this option. This option expired yesterday. It was trading at $71.49. Next one, NVIDIA. NVIDIA, I sold three covered call options. The strike price on those options was $125. NVIDIA was trading at approximately $120 when I sold the three options. I collected $427 in premiums. At the end of the options period, yesterday, they expired. NVIDIA was trading at $112.14 yesterday when they expired. Next one, Pfizer. I sold one covered call option on Pfizer. The strike price was $27. When I sold the option, it was trading at $25.50. I collected $15.44 in premiums. The option expired yesterday. Pfizer was trading at $26.66 when the option expired. Next one, QQQM. This is the Invesco NASDAQ 100 ETF. For this one, I sold six covered call options. strike price 215. This one is still ongoing. This is not a 1 week option. This is like a 3 week option. It's going to expire March 21st. Now, when I sold the 6 options, it was trading at 210. I collected $1,135.98 on these options yesterday. And again, this one is not expired, it's still ongoing. But at the close of trading yesterday, it was trading at 202.04. So we're going to watch this one closely. I have a very good sense for this one. All right, next. SoFi, the digital bank. I sold 2 covered call options on SoFi. Strike price was $15.50. It was trading at $14 when I sold those covered calls. I collected $28.87 in premiums. The options expired yesterday. The stock was trading at $12.56 at expiration. Next one, Tesla. I sold 1 covered call option on Tesla. The strike price on that options contract is $305. Tesla was trading at $290 when I sold the covered call option. I collected $578 in premiums. This option expired yesterday, and Tesla was trading at $262.38 at expiration. Next one, Taiwan Semiconductor. Boy, we've heard a lot about Taiwan Semiconductor in the news lately. They're going to be investing $100 billion in our economy. So anyway, I sold 1 covered call options contract on Taiwan Semiconductor. And interestingly, I sold this option right before that news broke. Otherwise, I probably wouldn't have sold the option. But, sometimes that's how it works. But on that options contract, the strike price was $177.50. It was trading at $172 when I sold the option. I collected $311.33. This option expired yesterday, and TSM was trading at $177.05 at expiration. Next one, UPS. Now, here's something interesting and something to take note of. For UPS, I sold 2 options contracts, and I had 2 different strike prices, and I did it on 2 different days. And you can see it in the graph in the table there. But one strike price was 120, the other one was 122, and you can see where UPS was trading when I sold those options. One was assigned, one was not. One was trading at 119.50 with a strike price of 120. I got a little too aggressive, and I probably should have given myself a little bit more space on setting that strike price. That one was assigned. The other one was trading at around 120.50 when I sold the option, and the strike price was 122. That expired. You can see how much I collected. I collected 56.44 and 71.34 in premiums, respectively. I'm keeping those premiums, obviously, but the one that was assigned, and the way it works is basically when there's an assignment, it is just sold, and so you get the proceeds from that sale. So I am sitting on the cash right now, and so I have a decision to make. What am I going to do? I'm going to see how it does Monday. If I do see that price go down, I will buy back into UPS and I'll sell another covered call. But the numbers have to work. It has to be profitable on my side. I cannot lose any money on these trades, and I refuse to. And I think it's very easy to make money, and that's what I'm going to continue to do. Anyway, that's where we are with UPS. Next one. Next one is VOO. Well, this is another ETF, and I sold 2 covered calls on this S&P 500 ETF. The strike price on these options contracts is $555. VOO was trading at around $538 when I got in. I collected $248.66 in premiums on these 2 options contracts. These options expired yesterday, where VOO was trading at $528.50. Next one, Verizon. Okay, now here's another one where I probably got a little too aggressive. I sold 1 covered call option on Verizon. The strike price was $44 It was trading at around 43 when I got in. Um, and I did collect $21.44 in premiums. But here, the market price of Verizon did go up, and it was assigned, and it was trading at a little under $46. Kind of surprising. I kind of look at Verizon as something that kind of trades sideways, but it did go up a little bit. So this was assigned. This one was sold. I am sitting on the cash uh, proceeds from this sale. So again, like UPS, I'm going to be watching this one, and I'm going to decide if I see the price go down, I may buy back in, or I just may redeploy the cash, or I may just sit on it. But again, the numbers have to make sense. It has to be something that I am going to make money on, because that's what we want. We want to make money. We want to grow our portfolio. All right, next one, and this is the last one I'm covering. Walmart. Walmart, I sold two covered call options on Walmart. I did different strike prices of 101 and 102. For both of these, they were trading at around 97.50 at the time. I collected $49.44 and $15.34 in premiums. Uh, Both of these expired yesterday at the end of the options contract. Walmart was trading at 91.68 yesterday at the end of trading. So, folks, that is it. Those are the 26 options. They're all weekly except for the QQQM ones, which won't end until the 21st. I'm going to continue to report on the progress of those as well as new ones that I do weekly. All right, and here's just a summary. You can see basically the 26 that were sold, and then the two that were assigned. I've shaded them, uh, and I've collected $3,302.50 in premiums this past week. You can also see the running total of premiums collected the last 2 weeks. So $4,942.49 in premiums. All right. Just wanted to share with you, as you know, that I am an affiliate partner of Seeking Alpha. If you're interested in subscribing to this wonderful resource for investors, I encourage you, click on the link. I can get you a discount for Seeking Alpha Premium as well as Alpha Picks. You can read the description there. I subscribe to both of these, but I'm also an affiliate. You can also bundle these and get a discount for a bundle of both Seeking Alpha Premium and Alpha Picks. These are for annual subscriptions. All right. Check me out on social media. I am on X, I am on Instagram, and I am on Facebook. We share a lot of interesting, compelling dividend and investment content. Check out my colleague, Dividend Snowball. He's also on X and he's on Facebook. He has absolutely wonderful discussion groups with a lot of smart people that have great ideas on investing. And there's a couple of other colleagues you can check out. Quality Dividend Investing and Growth on Facebook, Saving and Investing for Beginners on Facebook, and Dividends Are Us on Facebook. And folks, that's it. Thank you for joining me today. If you enjoyed the video, please give us a like, share the video with a friend, hit that notification bell, and subscribe to our channel here at Dividend Blasters. Until our next video, God bless.